Hey everyone, welcome back. Did you know BlockDAG just dumped hard and is now sitting around $0.012? You feel it. Because when the price was higher, you couldn't sell. And now that it's lower, you're still stuck. Think about that for a second. Because not long ago, the narrative was very different. A $0.05 launch price, a locked debut value. Pre-sale buyers were told they could sell at TGE. Even projections of massive returns from early entries. That narrative was powerful, and it worked. Hundreds of millions of dollars flowed into the pre-sale. Thousands of people believed in that story. But markets don't respond to promises. They respond to behavior. And today, the behavior is telling a completely different story. From its peak, price didn't just pull back, it collapsed. More than 90% wiped out in a very short time. Within a single day, price dropped aggressively into the 0.01 range. New lows formed. Momentum disappeared. The chart turned completely red. Hype is gone. Demand is weak. But here's the part most people don't talk about. Because price alone is not the full story. Since listing, pre-sale investors haven't been able to act. No deposits, no ability to sell. So when price was going up, you could only watch. And when price started falling, you were still watching. Same position, no control. Now ask yourself, what is the real advantage of entering early if you can't participate when it matters most? And this is where things get even more interesting. On one side, the official narrative, along with many community reports, still suggests that deposits are restricted or suspended for pre-sale holders as part of a phased launch plan with full access expected around June. On the other side, reality tells a slightly different story because I tested it myself. And recently, I was able to transfer almost all of my BDAG tokens from my wallet to my Bitmart exchange wallet. I've included the full video in the description so you can verify the process yourself. So technically, access does exist, at least for some wallets right now. But here's the critical part, timing. Because that access only became possible very recently. At the same time, the market had already collapsed, prices down more than 90% from its peak. Demand has largely disappeared. So even if you can move your tokens now, the opportunity window is already gone. You couldn't act when price was strong, when momentum was still there. And now, even with partial access, you're entering a market in extreme weakness. So what does this really mean? Access without timing is not a real advantage. It's a delayed illusion. Because what matters in markets is not just whether you can act, but when you can act. And when we zoom out, markets don't move randomly. They move in patterns, driven by behavior, structure, and narrative. Now let me ask you something. Do you see alignment between the narrative and the reality? Because on one side, the narrative suggests control, stability, and a strategic rollout. But on the other side, the data shows weak demand, minimal after-sale participation, delayed access, and now a collapsing price. That's not alignment, that's divergence. And when divergence happens in a market, price eventually resolves it. Now let's talk about the most important moment ahead, June. Because June is not just a date, it's a structural event. That's when deposits are expected to fully open. And when that happens, all supply enters the market. Pre-sale tokens, after-sale tokens, everything becomes liquid. And this is where the real test begins. Can the market absorb that supply? If demand is strong, price can stabilize. If demand is weak, price reacts accordingly. And based on what we're seeing right now, demand doesn't look strong. After-sale activity is extremely low compared to the pre-sale phase. That's not just a slowdown, that's a warning signal. Now put yourself in the position of a pre-sale investor. You entered early based on a clear expectation that you would be able to sell at or near $0.05. That was the promise. But what actually happened? At listing, you couldn't sell. Deposits were restricted. So when price moved up, you couldn't take profit. And now that price has dropped significantly, you're still in the same position. Even when access starts to appear, the opportunity is already gone. So naturally, this leads to a very direct question. Where is the original promise? Where is the moment where pre-sale investors could actually sell at $0.05? Because that expectation is what justified the early risk. And now we arrive at the second, more important question. If deposits truly open in June, can the market realistically support that price? Let's be objective. If the answer is yes, then despite everything, delays, restrictions, the original narrative still holds. It means pre-sale investors could still recover financially. Time may have been lost, but capital might still be protected. But what if the answer is no? What if demand doesn't return? What if supply enters a market that isn't ready? Then the situation changes, because at that point, the risk becomes structural, not emotional, not temporary, structural. And this is why I approach this with skepticism, not because of fear, but because the structure doesn't support the narrative. And in markets like this, structure always comes first. Now, to be clear, this is not about attacking. This is about understanding outcomes, because at the end of the day, there are only a few paths forward. Demand returns and price stabilizes. Balance is found and the market consolidates, or pressure continues and price moves lower. But whatever happens next, it won't be random. It will follow behavior, it will follow structure, and it will expose the truth behind the narrative. So now I want to ask you, after everything you've seen, the promises, the delays, the price action, and the reality today, what conclusion do you come to? Do you see this as a strong project or a weak one? Because the market doesn't judge based on words, it judges based on outcomes. And whatever this becomes, it will be defined by what actually happened, not what was promised. This is not financial advice. Always do your own research. If you value this kind of breakdown, share your thoughts below and follow Bias Positive Digital Rise. Stay sharp.